Trending indicators usually suffer and perform terribly in ranging markets. Why, you may be thinking? Well, it's because these indicators, like the moving average, can do a pretty good job when the market is trending, but as soon as the market starts ranging, they end up giving a bunch of false bullish and bearish signals. This can lead you to losing all your money. But how can we avoid this? Well, one effective method is to incorporate the volume of the price into your analysis. To do that, you would need a trend indicator that can seamlessly blend both trend and volume into one cohesive system. And this is where the volumatic VIDIA indicator comes into play. This powerful tool doesn't just show you the trend of the market. Oh no. Instead, it also reveals the volume at different levels of that trend. In this video, we're gonna go over what this indicator is. Let's get into it. Now, to get started with this indicator, you want to go to TradingView and then open any trading security that you like in any time frame. For me, I'm going to be using the 15-minute time frame of GBP/JPY. Next, open the indicator search tab and type in Volumatic Variable Index. And it's going to be this one by Big Beluga. This, ladies and gentlemen, is the all-powerful Volumatic Variable Index Dynamic Average Indicator. A pretty long name, but thankfully it can be abbreviated as VIDIA. For the rest of this video, I'm gonna be calling it the VIDIA indicator. So what exactly is it? Well, it's a tool designed to provide traders with a dynamic view of market trends and volume analysis. By combining the adaptability of the variable index dynamic average with volume analysis, it offers insights into both the trend direction and the underlying strength of price movements. In short, it not only identifies trends in the market, but also visualizes buying and selling volumes within each trending phase. This indicator is made up of the following components. The first and most obvious is the VIDIA line, which forms the trend cloud. Whenever the VIDIA line is green, it indicates that the market is bullish. Conversely, if the VIDIA line turns red, that would indicate that the market is bearish. Now, to help you spot transitions between bullish and bearish trends, there are up and down arrows. As you can see, a green upward arrow indicates the onset of a bullish trend, while a red downward arrow indicates the onset of a bearish trend. Now, looking at this indicator, you'll also notice that we have this table right here with labels for buy volume, sell volume, and delta volume. Let's explain what this table actually does. Here we have a bullish trend. The buy volume means that throughout this bullish trend, the total volume for all bullish candles was 65,000, while the sell volume means that the total volume for all the bearish candles was 49,000. Now, the delta volume is just the difference between the buy volume and the sell volume expressed as a percentage. So for this particular trend, the delta volume was 27.9%. It's essential to remember that these numbers are not overall figures. They only apply to the current trend you're in. Right now, we are in a bullish trend, which means these numbers reflect this specific bullish phase. If we were to switch to a bearish trend, if I just do a bar replay to this point, these numbers would be different. In this particular bearish trend, the buy volume would reflect the volume of all the green candles for this particular trend. The sell volume is the volume for all the red candles within this trend. And then the delta volume is the percentage difference between buy and sell volumes within this trend. For a bearish trend, the delta volume is supposed to be negative. The more negative this value is, the higher the sell volume, which makes the market ideal for taking short positions. Conversely, in a bullish trend, like here, the delta volume is gonna be positive. The bigger this number, the higher the buy volume, making the market ideal for long positions. Now that we know exactly what this indicator is made of, and most importantly, how the volume functionality works, how can we use it to trade? Well, I'm gonna tell you, but before we do that, let's take a look at the settings of this indicator. The VIDIA length controls the period over which the VIDIA calculates the average. A shorter length is gonna produce more false signals because it makes the indicator super sensitive to price changes, while a longer length results in a smoother trend with fewer signals but may lag behind price movements. So finding a balance between higher and lower numbers is recommended. The VDM momentum determines the number of periods used in calculating the smoothing for the trend cloud. The distance factor for upper or lower bands controls the positioning of these bands relative to the VDM line. Higher numbers will place the bands further away from the price, which is suitable for volatile markets, while lower numbers is going to bring the bands closer and closer to the price, ideal for less volatile markets. And then here you can choose the data source. You can customize the shadow colors or even disable the shadow itself. The shadow is actually this trend cloud right here. Personally, I'm not going to change anything, but if you've made your changes, click OK. Now, there are two methods of using this indicator to trade, depending on the type of market. Number one, trending markets. Number two, non-trending markets. Let's start with trending markets. In a trending market, this indicator can be used for two main purposes. The first and most obvious is trend identification. If the trend cloud is green, the trend is bullish. Conversely, if the trend cloud is red, the trend is bearish. The second use of this indicator in a trending market is to identify the strength of the trend using this table. So here we have a bullish trend, and it's not just any bullish trend, it's a strong bullish trend. As you can see here, looking at the table, you can see the strength of this trend reflected in the delta volume, which is 65%. Per my experience with this indicator, whenever this number exceeds 50%, that usually indicates a strong bullish trend. And when using this indicator to trade, you would want this number to be as high as possible, preferably over 50% or at the very least 30% for a decently strong trend. But always remember, the higher this number, the stronger the trend, which also means the higher the probability of profitable trades. This number can actually go as high as 200%, although that's highly unlikely because reaching that number would require an unbroken sequence of bullish candles. Now here we have what I would call a moderate trend. As you can see, the trend is still bullish because the candles are going higher and higher. Looking at the delta volume, you can see it's only 12.14%. This means the amount of buy volume and sell volume were almost equal. A trend like this will most likely result in trades taking longer to conclude, and overall you're probably going to lose more than you win because the market can shift to ranging at any moment like it did here. Also, with this number at 12, it's so close to the limit for ranging markets. In my experience with this indicator, whenever the delta volume for bullish trend drops below 10%, it's no longer a trending market. It becomes a ranging market disguised as a bullish trend. Now, on the bearish side, we have a decently strong bearish trend. As you can see, the delta volume is at minus 45%. Keep in mind that for bearish trends, you want this number to be larger towards the negative side. The more negative, the stronger the trend. This value can go to minus 50, minus 100, or even all the way to minus 200%. But if it gets closer and closer to 0%, the trend weakens. For example, if we play this section, you will notice that the market is experiencing a pullback with more green candles appearing. This causes the delta volume to become less negative, signaling a weakening trend. Eventually, if this continues, it can indicate a potential trend reversal, which brings us to another important application of this indicator, which is identifying trend reversals. In a bullish trend, the delta volume value will get smaller and smaller toward the end of the trend. Whenever that happens, it's a signal that the market may be reversing soon, which means if you had any long positions, now would be a pretty good time to start exiting. As you can see here, the delta volume got smaller and smaller until eventually the trend shifted to bearish. And that, ladies and gentlemen, concludes the applications of this indicator in a trending market. The second type of market where this indicator is going to be applicable is a non-trending or a ranging market. So how can we use this indicator to identify a ranging market? You may be thinking, well, we're going to use both the trend cloud and the delta volume. Whenever the delta volume is less than 10% and close to 0%, it's a strong signal of a ranging market. Right here we can clearly see that the market is ranging, but looking at the trend cloud, it's colored green, which would typically indicate a bullish trend. If you were to follow this indicator blindly, like you would follow a moving average, well, you would take long positions here and probably end up losing money. However, by checking the delta volume, which is at 2.43%, which is less than 10% and close to zero, you will get a clearer picture of the trend. A low delta volume like this tells you that this is not a bullish market, it's a ranging market. If you were to take any long positions here, you would see that the price eventually heads down, likely stopping you out. So this indicator is basically going to be a savior in such market scenarios, helping you avoid unprofitable trades. Now remember, when the trend cloud is green, the delta volume is supposed to be positive, but it can also go to negative despite the green trend cloud. Just know that as long as this value is less than 10% all the way to negative, the color of the trend cloud wouldn't matter because it would mean that the market is ranging. The opposite logic applies when the cloud is red. If the delta volume is close to zero or positive, but the cloud is red, well, the color of